What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, we welcome you to subscribe. Otherwise, you can support our channel if you like, share, comment down below. It helps our content get out, and we greatly appreciate the support. So for today's video, we have another fintech review. This one is related to cryptocurrencies. Now, we haven't covered cryptocurrencies that much on this channel, and by no means am I a cryptocurrency expert, but I wanted to bring up this particular topic just given what's been going on lately with cryptocurrencies, especially Bitcoin. So, in summary, a cryptocurrency is a digital asset and it's another form, a medium exchange to be able to transact. Now, I'm not going to get into all the technology behind it, but I wanted to talk about Bitcoin specifically. So, for those who don't remember, at the end of 2017, Bitcoin had peaked. Now, I don't remember the price that it peaked at. I want to say somewhere around $20,000. That was what a Bitcoin was going for. And then right after that, the price of Bitcoin tanked. Now, over the past 4 weeks, Bitcoin has been on a rally. I remember the last time that I sold Bitcoin, it was around 13,500, 600, something around that. I haven't checked today, but last I checked, Bitcoin was trading over 18,000 and some change. So it's really taken off over the past 4 weeks. Now, the particular fintech company that we're going to be going over today offers a unique loan product, right? So they offer crypto loans. So the fintech company that we're going to be reviewing is BlockFi. So BlockFi offers crypto loans. So it's another form of secured lend. Basically, what happens is you're able to store your Bitcoin on the BlockFi platform, and that Bitcoin is held in collateral against a loan. Now, they're currently offering about 50% LTV. So let's say you have 10,000 in Bitcoin. That means you would be able to get a loan up to $5,000. Now, one of the great things I think about this is the fact that the price of Bitcoin, in my opinion, is going to increase over time, right? And the reason why I don't think Bitcoin is going to crash again like it did in 2017 are for two reasons, right? Number one is the network effect. So back in 2017, Bitcoin was still somewhat on the fringes, right? But now Bitcoin and cryptocurrencies in general are more mainstream, right? So you have big players getting into it. Like PayPal, you can now buy and trade Bitcoin on the PayPal platform. Cash App, you could buy Bitcoin on Cash App, right? Some sports betting sites are starting to accept Bitcoin as a deposit method. So the adoption of Bitcoin is becoming much more mainstream. And when it comes to the network effect, the strength of the network is basically tied to the adoption or the number of users. So more people that buy into it, more people that believe in it, that trust in it, the value is going to increase. So that's exactly what's happening with cryptocurrencies and especially with Bitcoin. Bitcoin is becoming much more mainstream. Now, the second reason why I don't think Bitcoin is going to crash again like it did in 2017 is because a lot of dollars are fleeing over to cryptos because people want to be able to maintain the value of their money. So when you have like the dollar that's being devalued because there's a lot of money printing and stimulus and quantitative easing. I'm not going to get into all the macroeconomics behind that, but basically the value of your dollar is becoming less and less, meaning a dollar is having less purchasing power as time goes on. So let's say if you have, easy example, you have $1,000 today. A year from now, that $1,000 isn't going to be able to purchase as much. So dollars lose purchasing power, and that's one of the reasons why I don't believe that cash is king because cash is currently being devalued. Moving your money to other assets that are going to appreciate is something that a lot of people are looking into, whether that's a business, whether that's real estate, whether that's physical assets like gold and silver, or even digital assets like Bitcoin. A lot of people are looking to stash their money into those types of assets because they know a year from now, it's likely going to be at a higher value than it is today. So that's another reason why I don't think cryptocurrencies are going to crash again. But anyways, let's jump over to BlockFi so I can walk through some of the features that they offer in terms of their crypto loans. They also offer crypto savings accounts, essentially, where it actually is called a BlockFi interest account, where you can earn up to 8.6% APY on your digital assets. All right, so here we are on the BlockFi website. So it's just blockfi.com. And so they have three types of accounts. They have a BlockFi interest account, a crypto loan, and a trading account. So with the BlockFi interest account, you can earn up to 8.6% annual return, and you start accruing interest immediately. Plus, you get compounding interest every month. So that's something that you could look into. They also have a trading account where you could trade different cryptos. I'm not going to go too deeply into the trading account or the interest account. I wanted to focus in on this crypto loan. So you can borrow against the crypto asset that you have on the BlockFi platform, and the interest rates go as low as 4.5% APR. Now, again, they're basing it, it's not based off of credit, it's based off of the value of the cryptocurrency that you do have or crypto assets. And they basically do a 50% LTV. So LTV stands for loan to value. So for example, the what they have here, if you have, for example, let's say $5,000, you're going to need 0.54 Bitcoin. And that's essentially telling you what you would need in order to be able to secure that loan. Now, one of the great things about this type of loan, right, is that crypto assets can increase in value while you're holding it. So by being able to borrow against it, for one, you'll be able to have liquidity to go tap into other investments and deploy capital in other areas as well, not just having your asset locked up and not being able to tap into any of the value of it. You can receive same day business funds. There's no prepayment penalty. And it's just very, very flexible. Borrow up to 50% of the value of your crypto. And as they say here, use your crypto backed loan to invest in a variety of different assets. I think this is even better than, let's say, traditional secured lending because the value of dollars are not increasing as quickly as like a crypto asset. So it's kind of like you're double dipping in a sense, right? Because the asset's appreciating, or at least we're under that assumption that the asset is appreciating. And then you also have some liquidity that you can go and invest in something else and get a return. So that's all I really wanted to go over. If there's anyone that's interested in this BlockFi platform, definitely go check it out. There's a link in the description. Until next time, y'all take it easy and we'll talk to you soon. Peace.